What an absolutely crazy month it has been in the real estate market. It seems as though things are changing almost daily right now. So, in the past month, since my last market update, it's definitely been a wild ride for sure. So, what I do know is that there's a lot of confusion out there. So, today, I want to focus on three areas for you. We're going to touch on the increasing talk of a recession. We're also going to take a look at mortgage rates and then close with how all of this is likely to impact home prices going forward. Hi, this is Andrew with the S2 real estate team here in Frisco, Texas. And as I mentioned, it has been a crazy month for the real estate markets, and it's changing almost daily, as I mentioned. What I do know is that there's a lot of reports out there, there's a lot of information in the mainstream media that is doing more to create confusion than it is to provide any sort of clarity whatsoever. And let's face it, all homes are bought and sold on emotion. And the headlines, the stories are basically fueling that emotion. And my goal today is definitely not to convince you one way or the other on what is or isn't going to happen, as I'm not going to pretend to know exactly, but it's just to provide you with the facts and the latest data so that you can make the decision that is best for you and for your family. And with that in mind, let's talk recession to start with. That word's been coming up more and more. And what I do know is from the buyers that we've been talking to in the last, especially 2 to 3 weeks, they're very confused. They don't know what's gonna happen. If we're going to a recession, what's that going to do to the housing market? Is it going to cause prices to fall? What's going on with mortgage rates? How will those be affected? And it's just unaffordable right now with how fast prices have gone up. Something has to change. That's something we can all agree on. So the biggest difference that you've got is when we talk about this for a minute, the Federal Reserve is in an interesting position right now. They have openly said, Jerome Powell's openly said that he wouldn't mind the housing market getting a bit of a reset because he understands, as we all do, that what we've been experiencing the past couple of years is not sustainable. No one is questioning that whatsoever. But you've got this talk of a recession. And how is that going to play out? The only way the Federal Reserve can bring inflationary pressures down, right, which we've got high inflation. So, talk of a recession and high inflation. So, it's a tricky situation. The only way to bring inflation down is to raise interest rates. If you keep raising interest rates, it has a negative impact on the economy and can throw the economy into a recession. And there's many that believe we're already in one. And obviously, we won't know as you got to look backwards. So it's 2 consecutive quarters of negative growth. And so the latest numbers are going to be released, within the next week or so, and we'll have a better idea of where we are. But let me share my screen with you here and go over a few slides. All right, so right here, this first slide that we're looking at, what it's telling us right here is throughout history during the recessionary period, interest rates go up at the beginning of a recession, but in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we've seen a repeated uptick in interest rates followed by lowered interest rates. Well, let's take a look at what's happened lately. There's no doubt interest rates have gone up. So mortgage rates have jumped about 3% so far this year, and they've gone up rapidly over the past 6 to 8 weeks. But over the last couple of weeks, they've actually started ticking down. So the bottom line is it's a very volatile time in the mortgage industry right now, which makes it extremely difficult to know exactly where rates are going from here on the rest of the year. I am seeing, speculation that rates could start to climb again. There's idea that the Fed's going to bump interest rates another 3 quarters at their July meeting. And although that doesn't directly impact the mortgage rate, indirectly, it obviously has an impact. And if that happens, rates could swing back up. But there's also talk based upon the economic data, which is being skewed by the latest information that shows unemployment is holding, more jobs were added to the economy, and the economy overall appears to be fairly strong. but wage growth isn't keeping up with inflation. So, what are we going to do here? Well, the important thing to know is if we do go into a recession or it's determined that we are in one, that's not bad news for mortgage rates. So, as we go back, let's take a look at what's happened in the past recessions to mortgage rates. So, you can see here that going all the way back to 1980, whenever there has been a recession, interest rates during that period have then fallen. And that is something that we're going to look at, mortgage rates, I should say, because mortgage rates right now, they've jumped up substantially and they've made it very, very difficult for buyers out there. So, with that in mind, let's go back to what I said at the beginning. Chairman Powell has said he wouldn't mind the housing market getting a bit of a reset. So, what's happened? So, with mortgage rates jumping up as fast as they have, what we have definitely seen is demand from buyers has definitely pulled back, right? So, remember, we've got the supply and demand. So, on the demand side, you've definitely seen a drop off in demand from the lack of affordability based upon where rates have gone. Now, some buyers that I've spoken to have said, we're going to wait right now for home prices to fall and then jump back in the market. So stay tuned to the end of this because I'm going to touch on that on what's more important, home prices to fall or mortgage rates to go down, which will impact you more. So we'll take a look at that. So with that in mind, right, you've got a lot of news reports talking about pending home sales, right? And sales overall. They're saying home sales are falling, home sales are falling, pending sales are down, mortgage applications are down, home sales are down year over year. That's spreading a lot of fear. So I just wanted to provide a little bit of perspective. Are home sales down? Absolutely. As I just mentioned, with mortgage rates going up, we've seen a big pullback in the amount of traffic out there amongst buyers. However, home sales are down relative to 2020 and 2021, which were absolutely banner years. But if you look at where the latest projections are for where home sales are going to be for the remainder of this year, we're looking at closing out 2022 with approximately 5.4 million sales. That's actually right in line with where it was in 2017, 18, and 19. So are we down? Yes. Are we in a free fall into uncharted territory? No. And what I've been trying to explain to people lately is what you're seeing in the market right now, we're going back to normal. Things are starting to settle down, right? The impact of that is it's taken everyone by a shock because of how fast it's happened. But from a buyer's perspective, this isn't exactly bad news. All of a sudden, you're not seeing as many multiple offers. You're not seeing bidding wars. You're not having to make a decision overnight, although we still are seeing homes sell relatively quickly. For sellers, all of a sudden, the home didn't sell over the weekend, so what's wrong? Something must be catastrophically wrong with the market. We listed the house on Thursday, it's Monday, and I don't have 10 offers. That market's gone. It's not going to happen anymore, right? So that doesn't necessarily mean it's a bad thing. So again, perspective is important here. So what we're seeing is a shift back towards normal. Now, many people have said with all of this going on, it must mean that home prices are going to fall. And if you've seen videos I've done in the past, I've been a little bit on the fence on where that is going to be. And it's important to point out that decelerating home prices is not the same thing as depreciating home prices. See, by and large, home prices are impacted by supply and demand. Let's look at the past 2 years. Interest rates fell, mortgage rates fell into the high twos at a time when there was very, very low supply. What happened to home prices? They shot up dramatically. You had extremely high demand, some would say artificial demand, based upon how low mortgage rates were against historically low inventory. What happened? Prices shot up substantially. And what we absolutely need to see is some balance come back into the market. Now, whether you're a fan or not, Dave Ramsey recently had this to say, and it was spot on, which is why I included it here. He said the root issue of what drives house prices almost always is supply and demand. Now, interest rates affect that. When interest rates go up, guess what? Fewer buyers. The demand goes up, though, thus prices are going to have to soften or not be as cray cray, his words, as they have been. And that's what we're seeing right now. You may have noticed it. You're starting to see more price reductions. Those price reductions for many of the properties that we're seeing right now is not an indication that the market is declining. It's sellers that were too optimistic in the first place. They were pricing their home as if it was 2 months ago. So, give you an example, here in Frisco, Texas, you have actually seen the median price of homes fall for the last 2 months. However, we are still up 25% year over year in home prices. So even though you're seeing the pace of appreciation come down, the year over year percentage increase is still there. And as Dave Ramsey mentioned, it has a lot to do with supply and demand. So, staying on that note, let's take a look at this. And this is very, very similar to something you may have seen from me before. The blue lines here represent new home construction all the way up to 2008 in the United States. The average annual units completed. This dotted line is the 50-year trend line. Everywhere in gray is 2008 to now. Okay, look, we have 14 years in a row below the 50-year average as far as new construction. You may have even seen reports talking about how many millions of units behind homes are in this country with regards to supply. So again, pricing ultimately is supply and demand, right? Now, let's flip that and take a look at demand. And by demand, all we're simply doing here is looking at who is buying homes. This blue box is circled around the peak home buying years, which is from your early 20s up to about 34. Those are the prime home buying years for first-time buyers. That's the majority of the people coming in. You can see population by generation. It's touching the very beginning of the Gen Z and the millennials. Right there, it's the highest population by generation. So you've got demand ever increasing based on this. And as I showed you on the previous slide, you've got supply at 14-year lows. So if we put that into some perspective, what does that mean for us overall? For anyone that is thinking that home prices are suddenly going to tank, there's no data anywhere out there to support that right now. I'm not saying home prices are not going to soften, but I think if you're out there sitting thinking, okay, well, if we go into a recession or if this happens or if that happens, home prices are suddenly going to drop substantially. How much of a drop are you expecting? Because again, supply and demand is what basically dictates home prices. But let me leave you posing this question. What is more important, or how would you be better served? A drop in home prices or if mortgage rates come down? So again, one thing I've shared, but we're going to do this in reverse. Every time the interest rate goes up 1%, it lowers your purchasing ability by approximately 10%. So if a 1% increase in the mortgage rate lowers your purchasing ability by 10%, you can kind of see, if we play that in reverse, you would need home prices to fall 10% for the equivalent of a 1% reduction in mortgage rate. If you look at the fact that mortgage rates have increased 3% so far this year, you would actually need you would need home prices to fall 30% from where they are right now to get back to where we were at the beginning of the year. Do we really think home prices are going to fall 30%? I don't. I don't see it. And again, there's others that say this is exactly what's going to happen, and you need to make the decision that's best for you. But I don't see anything in the data that actually says we should be expecting a price drop like that, and neither do the experts. The latest survey shows that they are still forecasting moderate home price appreciation all the way through 2026. Granted, not at 20, 25% a year, but we're talking 3, 4, 5% appreciation year over year. As I mentioned, here in Frisco, we're still running a 25% year over year, although that number keeps coming down. So, for anyone out there that's considering buying, one of the things to look at, and what many of the new home builders are doing right now, is offering mortgage rate buy downs. So, let's say the rate's at 6% currently. They're offering to buy that rate down for you into the mid fours. That will save you a lawful lot more money over the long haul than that home price being reduced by 10 or 15%. So keep that in mind. So what you actually want to see here is you want to start to see those mortgage rates come back down, as that will actually bring affordability back into play. And I admit it's tough out there right now, and you're seeing, just as I mentioned, a lot of people with a lot of confusion, but there are options. Homes are still selling. New home community I was in over the weekend had 7 homes sell in one afternoon, one day last week, and they had continual traffic while I was there the entire time. But there are options out there. If you have a specific situation you'd like to discuss in more detail or kick some ideas around, we would be more than happy to talk to you, share some ideas, and see if we can't provide some additional information so that you can make the best decision for you. Please don't hesitate to give us a call at 469-296-5230, or send us an email at contact@s2realestateteam.com.